I don't think gold is going to trade back below 2,000 again. I mean, I think those days are gone. I think the new support is probably just below 2,500. Is it possible that gold can go below 2,400? I suppose that's possible. That could happen. Maybe 2,350. I wouldn't wait for that. And I've been telling our customers at Schiff Gold not to wait for a bigger break in gold. I just think you buy gold here. I think 2,500 is the new 2,000. I mean, and I don't think 2,500 is gonna stay here for long. I think we're gonna be at 3,000 before we know it. Maybe we could get there before the end of the year. We could start to see some bigger moves. But even if we don't close the year at 3,000, I think we'll be closer to 3,000 than 2,500 by the end of 2024. But 2025, I mean, price can go much higher than that. I mean, I was calling for $5,000 gold back in 2010, 2009, and we didn't get there. We got to 1,900. I think 5,000 is low. I mean, my target is much higher now because we've printed so much money since then. There's been so much more inflation that's been created that gold is a lot more valuable in terms of these inflated dollars than it was, back then. But I think we're going to start moving quickly at some point in the price of gold, especially when you start to see investors buying. I mean, they haven't bought into this rally. I've been talking about this is the most unloved gold bull market. You can buy gold at an all-time record high, and you're a contrarian because nobody believes in it. Nobody cares. Nobody covers it. The public isn't buying it. The hedge funds aren't there. The pensions, the endowments, nobody is buying. It's at an all-time high. So it's going to have to go much, much higher to get on anybody's radar, and then even higher to get the naysayers to capitulate, throw in the towel, and start to buy. Maybe the last ones will be the hardcore Bitcoiners who finally try to buy whatever gold they can afford with what's left of their Bitcoin. But eventually, you're just going to have a lot of people coming into the gold market. It's not just going to be some astute central bankers in the BRIC countries that are buying the gold. Me and my followers, there's just a small number of us that have been buying. We mentioned last time, we met at the New Orleans Investment Conference. Hopefully, I'll see you there this November. But that's like the oldest gold conference in the country. Biggest conference. We get like 500 people that show up at that conference. They just had the Bitcoin conference in Nashville. Maybe you were at that one, but I mean, there were over 20,000 people there. So that's where the excitement is, right? That people are ignoring what's gold, but you don't want to enter a crowded trade, right? You want to be in the market that everybody isn't overly enthusiastic about. I mean, normally the gold stocks lead the metal because investors are so confident that they want to buy the gold stocks. Now the metal is dragging the gold stocks reluctantly. And every time, look, yesterday, gold was down 0.5%, and gold stocks are down 4 or 5%. They just got clobbered on 0.5% move. Today, gold pretty much regained the entire 0.5% it lost yesterday, and the gold stocks were down again. It's like, so that's how scared. The minute gold got below 2,500, that's it, it's gonna crash, get out, sell, right? I mean, talk about climbing a wall of worry. This is the steepest, biggest mother of all walls of worry that I've seen in a bull market.
When analyzing the future prospects of gold, it's important to consider the broader macroeconomic landscape. Peter Schiff's take on gold and silver reflects his long-standing belief that these precious metals will continue to rise in value, especially as global economic conditions deteriorate and central banks mismanage monetary policies. In his view, gold is no longer just a hedge, but a necessity as fiat currencies lose purchasing power. Let's break down some of the factors contributing to this sentiment. Firstly, Schiff emphasizes that gold's ability to retain value over long periods, especially during times of economic turmoil, is unparalleled. Over time, the dollar and other major currencies have lost significant value, with the US dollar itself losing 99% of its purchasing power since the Federal Reserve's creation in 1913. This trend, which has only accelerated since the 2008 financial crisis, creates an environment where holding gold isn't merely an investment, but a form of protection against the erosion of wealth. As Schiff outlines, global central banks have recognized this. They've been actively repatriating their gold reserves and buying gold at record levels. Why? because gold is the only monetary asset that doesn't have counterparty risk. Unlike holding US dollars or other currencies, which can be manipulated or devalued by policy decisions, gold remains an asset that can't simply be created out of thin air. This is why central banks, particularly in BRICS countries, Brazil, Russia, India, China, and South Africa, are adding gold to their reserves, preparing for what may come when the dollar inevitably loses its global dominance. One of the primary drivers for the rising value of gold is inflation. In Schiff's view, inflation is not simply the rise in prices, as it's commonly portrayed in the media. Rather, it's a decrease in the purchasing power of currency. This means that as governments print more money to pay off debt or stimulate their economies, they are effectively diluting the value of each dollar in circulation. When central banks keep interest rates low or start cutting rates in the face of rising prices, they exacerbate the inflation problem. Schiff points out that the Federal Reserve, despite its rhetoric about controlling inflation, is actually contributing to higher inflation through its monetary policies. Every rate cut in the face of inflation makes the problem worse by encouraging more borrowing and spending while discouraging saving. Schiff argues that instead of cutting rates, the Fed should be raising them, even if that causes short-term pain in the form of higher unemployment or a slowdown in economic activity. The problem, according to Schiff, is that the current system is built on a mountain of debt, and raising rates would pop that bubble. So instead, the Fed continues to kick the can down the road, avoiding tough decisions while the debt burden grows ever larger. But at some point, the system will break, and when it does, the value of fiat currencies will plummet, sending the price of gold skyrocketing. Schiff predicts that gold will continue its upward trajectory, with a potential to exceed $3,000 by the end of 2024, and likely far higher in the coming years. He believes that even though gold is currently trading at all-time highs, it is still a vastly undervalued asset given the macroeconomic risks at play. When inflation really starts to bite, when governments can no longer pretend that they have control over it, and when the public loses confidence in paper currencies, gold will surge in value. He reflects on his earlier predictions about gold, noting that even though it hasn't hit $5,000 yet, the conditions today make that target more likely than ever. The sheer amount of money that has been printed since the 2008 financial crisis means that gold is worth much more in today's dollars than it was a decade ago. Schiff expects a rapid increase in the gold price once mainstream investors and institutions wake up to the reality of the financial situation.
People are complacent. Oh, the dollar will be the world's reserve forever because no other currency paper currency needs to be backed by real money. That's the problem. We have a monetary system right now without any money. We need to anchor the system with real money. The paper is a money substitute. It only has value if there's real money backing it up. And gold is the best real money that we've discovered. And that's where we're headed. So the question is, when does the world go back to the gold standard? Not does it, but when? But the history of the world for hundreds of years is gold is money. That history hasn't been rewritten. Gold's going to continue to be money for a long time. This period where it wasn't used as money will be a footnote in history and a lesson to be learned. So this has created this false sense of complacency that the dollar will remain the reserve currency indefinitely because there's no other currency that can take its place. But people are missing the elephant in the living room. The obvious choice to replace the dollar is what the dollar replaced, and that's gold. And so that is where we are headed. We are going to return to the gold standard. That is the norm throughout modern history, was to have gold as money. I mean, that's the problem with our current monetary system, is that we don't have any money anymore. We just have paper. But currency needs to be backed up by real money, and that is where we're headed. Certain countries want to back their currency with gold, and then other countries want to hold those gold-backed currencies as reserves. I suppose they could do that, but based on history, that it didn't work out that well when people put their trust in the United States. So I think it makes a lot more sense for central banks to own their own gold reserves and have those reserves to back up their currencies. And I think that is the move or the direction that the world is going to be headed. So instead of holding on to US dollars, which they then loan back to the U.S. in treasuries, central banks, foreign governments will hold a gold reserve. Whether they make their currency officially exchangeable into gold at a particular rate, we'll see. I mean, that would be an improvement. But to the extent that they continue with paper money, the primary backing for that is going to be gold instead of U.S. dollars. For the rest of the world, it's not a big change because they still had to earn those dollars, right? The only country that can print dollars is the United States. So if you're a foreign country and you're accumulating dollars, you might as well just accumulate gold because you still have to earn it. You still have to generate exports and have flows coming in to buy that gold. Or, of course, some countries, they can mine it themselves, right? And then the governments can buy it right off of the miners. But the big change is with the United States, because when we are back on a gold standard, or when the rest of the world is no longer on the dollar standard, then we don't get a free ride anymore.
Right.
We need to earn gold to back our currency, and we need to export to import, because right now, countries export over $1 trillion a year of goods to America to get dollars, right? As to back up their currencies, but they're not going to need those dollars anymore. They're going to need gold, and we don't have that. I mean, we do. I don't know that we're going to sell off the gold that we have, but what's going to happen is we're not going to be running those trade deficits anymore because the world's not going to need our dollars. They're going to need gold. For the rest of the world, it's not as big a change, but it will rein in governments to the extent that they want to keep running deficits. It's going to be a lot harder to do that with gold than with the U.S. dollar.
Right.
And I think interest rates globally are going to be a lot higher than they have been, and that's also going to be a big change.
By the time everyone starts jumping in, those of us who got in early will have already seen massive returns. The public will wait for mainstream media to catch on, for financial gurus to finally admit they were wrong. And even when the media gets wind of it, the experts will keep resisting, convinced that this is some anomaly. In fact, the last group to come around might be the hardcore Bitcoin believers, those who once hailed digital currencies as the new gold. Eventually, they'll capitulate, scrambling to buy whatever gold they can with the remnants of their Bitcoin holdings. This isn't just about individual investors either. When the global markets shift, when big institutions finally admit that fiat currencies are failing, we'll see a flood of capital move into gold. It won't just be astute central bankers from BRICS nations who are hoarding gold. We'll see pensions, hedge funds, and even the most skeptical investors finally start to buy into this golden bull market. Right now, people are complacent. There's this pervasive belief that the US dollar will remain the world's reserve currency indefinitely, and it's creating a dangerous false sense of security. People assume there's no viable alternative to the dollar because they don't see any other paper currency stepping up to replace it. What they're missing is that it's not about replacing the dollar with another fiat currency. It's about going back to something real, gold. We're not asking, will the world return to a gold standard? But rather, when will the world return to a gold standard? This is where we're headed. Gold has been money for thousands of years. It was only during the brief post-Witude period, after the Bretton Woods Agreement and the subsequent dissolution of the gold standard, that we saw fiat currencies take over. But this experiment with paper money, this era of money without any real backing, is coming to an end. Let's not forget that the entire history of civilization points to gold as the ultimate form of money. This notion that the US dollar will hold on to its reserve currency status forever is misguided. It's just a temporary phase in the grand scheme of history. When it collapses, as all fiat currencies eventually do, we'll return to gold. The only question is how soon this will happen. There's an elephant in the room that no one is talking about. Gold is poised to replace the US dollar as the world's reserve asset. The problem with today's monetary system is that we don't have any real money. We have paper, but paper is just a substitute. It only holds value because of the promise that something is backing it up. In reality, the dollar and other fiat currencies are backed by nothing. What needs to happen, and what will happen, is a return to a gold-backed system. Several countries, particularly in the BRICS coalition, are already exploring this. They see the writing on the wall. They understand that the US has overplayed its hand with reckless money printing and inflationary policies. These nations are positioning themselves for a post-dollar world by increasing their gold reserves and preparing for a currency reset. When central banks around the world start to hold their reserves in gold rather than US dollars, that's when the real shift happens. Countries won't need to back their currencies with dollars anymore. Instead, they'll back them with gold. We're seeing the early stages of this shift right now as central banks in emerging markets load up on gold. For the US, the implications of this shift are massive. When the world stops using the dollar as its primary reserve asset, the US will no longer be able to run its massive trade deficits. Right now, we import over $1 trillion worth of goods each year, and we pay for those goods with dollars that other countries want to hold. But when those countries start demanding gold instead of dollars, the free ride is over. At that point, the US will have to start running a balanced trade account. We'll have to export to earn gold to pay for our imports. The days of printing money and living off the world's desire for dollars will come to an abrupt end. This will force a major recalibration of the US economy. For other countries, this shift won't be as dramatic. After all, they've always had to earn dollars through trade. The difference now is that instead of accumulating dollars, they'll accumulate gold. But for the US, this marks the end of an era. Central banks will hold their own gold reserves, not US dollars, to back their currencies. This change will put a leash on reckless government spending. Running massive deficits will become far more difficult when your currency is backed by something real: gold. This will lead to higher global interest rates, tighter monetary conditions, and ultimately, a more stable financial system. The return to a gold-backed system isn't just a possibility, it's an inevitability. Throughout history, gold has always been the anchor of monetary systems. This brief experiment with fiat currencies is coming to an end, and we're about to witness the most significant financial shift in generations. So what can you do? If you're reading this and you're still on the sidelines, it's time to start buying gold. Don't wait for a dip that might never come. Gold at $2,500 is the new $2,000, and before you know it, we'll be looking at $3,000, $4,000, and beyond. By the time the mainstream media starts covering this story, it'll be too late. You'll want to have already positioned yourself. This is not just about protecting your wealth, it's about understanding the seismic shift that's happening in the global economy. When the dust settles, those who saw the writing on the wall and prepared accordingly will be the ones who come out on top. And as always, remember, if you don't hold it, you don't own it.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.